Good morning, everyone. You're watching a live market outlook for Wednesday, 7th of December 2011. Some optimism is back in play in the markets as the yesterday and the overnight price action showing some gains on world stocks and the euro as well as commodities as the key event. I would say historical event of Eurozone summit due on Friday, 9th of December is approaching. Optimism is rising now as the Euro leaders are ahead of the key decision in order to either continue with the Eurozone as it is now or to possibly trigger some negative movements that might actually be catastrophic and disastrous for the Eurozone as the monetary and political union, and might have bigger consequences in the other economies worldwide. The U.S. Secretary Geithner is meeting French President Nicolas Sarkozy today to press for decisive steps towards resolving Europe deepening debt crisis as the region's leaders prepare for a crucial summit this week. The Geithner voiced strong support for a Franco-German blueprint for an overhaul of the European Union treaty during the visit to Berlin yesterday, after the credit rating agency Standard & Poor fired the second warning shot at the bloc in 24 hours by threatening to cut the credit rating of its EFSF rescue fund. The Sarkozy and the German Chancellor Angela Merkel are due to propose Friday's EU summit a plan to impose mandatory penalties on Eurozone states that exceed the deficit targets, with the aim of restoring market trust and preventing the region's deepening debt crisis spiraling currently out of control. The details of the prepared treaty and reform proposals were due to be presented today in a letter to the European Council President, who will chair the meeting of the 27 EU leaders. Timothy Geithner also was due to meet the French finance minister in Paris early today before holding talks with Sarkozy and in the presidential palace. And his trip to Europe has been hailed by a sign of Washington views this week's summit as decisive for the fragile global economy. And as I mentioned, this is actually the key of possible solving the current problem or going towards disastrous consequences in case of not taking measurements right and firm measurements that would start taking Eurozone out of the current crisis. As I mentioned in our yesterday's session, the fiscal policy is one of the key points in this, and as long as is not unified and not controlled from one place, the outlook is not very good, because the monetary union as a single currency should have also the single fiscal policy that will be easier to control. These were the problems made at the beginning, when the European Union is created, and many analysts spotted this problem. However, no one reacted at that time, and during the period of good times for the European Eurozone countries, now when the problems are at their peak, this problem was raised again. And actually this is one of the key problems, because most of the member countries, especially those with the weaker economies and the peripheric Eurozone states, were just going out of control with their loans that resulted currently in Greece, then comes in Italy, Ireland was before, now Portugal and Spain. So this is actually the key point that should be handled in a proper manner, with the seen from all aspects and the proper decision made in order to tackle the current crisis in a way that will give some results. The Friday's Eurozone summit will be the key, and they will give us a more clear picture after the meeting what has been decided. At meantime, some positive news also come from Greece, as the Greek government passed the austerity budget after, of course, big clashes on the roads and the Athens central square of Syntagma. After Italy also passed its austerity plan a couple of days ago. So some positive movements are seen, but still the crucial things are to be done on the, hopefully now on the Friday's meeting, and then we might see some brighter sky above the Eurozone and of course the world economies. We hope that this positive sentiment will persist today and the coming 2 days ahead of summit, as Euro is heading higher and the commodities are back to strength after hitting some important supports that we will see later in our technical outlook. Just a brief look on today's calendar already released. Australian quarterly GDP, the last reading came at 1% as forecasted, but shrinking from the third quarter 1.4 GDP growth. Japanese leading indicators are slightly lower, 91.5% from the last month's 91.6 and forecast at 91.8. Swiss unemployment improved compared to the forecast that was at 3.1, remaining at 3% as the previous month release. Still to come the production, manufacturing and industrial productions. First from UK due at 9:30 GMT. Monthly manufacturing production is expected to shrink by to narrow by 0.1% compared to 0.2% growth previous month, while industrial production is forecasted even worse result, minus 0.3% compared to unchanged the previous month release. German industrial production is expected to show positive reading. 0.3% growth is today's forecast compared to minus 2.7% on the previous month release. Later in the day at 15:30 GMT are crude oil inventories, weekly crude oil inventories from US. The crude stocks are expected to, the draw of 0.8 million barrels is forecasted for day compared to last week's build of 3.9 million barrels. In the late hours of today, official cash rate from New Zealand Central Bank. The bank is expected to stay pat at 2.5% interest rate for Kiwi. Now let's take a look on technical part and see the latest movements in the market. Euro, the near-term price action shows some positive tone of yesterday's low at 133.32 as the pair broke below the near-term bear trend line drawn from 135.47 high of last Friday, signaling some fresh strength. 50% of the Fibonacci retracement has been cleared. The next upside targets are at 134.64, which marks 61.8% retracement, and then the high of Monday at 134.85, a break of which is actually needed to signal some stronger action higher and possibly to test levels above 135. A failure to regain 134.85 is again taking risk of further extension of the latest near-term down leg from 135.47. However, the positive hourly studies and the 4 hours are in the neutral to negative tone, are actually still risking a lower top and extension lower, while hourly studies are still in the positive mode. 20 days moving average at 134 as also figure support are offering initial support level, and holding above here would keep the recent positive tone. Loss of the platform at 133.60, 70.60, which is the previous also strong support, would be risky, as break below would signal a lower top and extension initially towards 133.32, pardon, the 133.38, the trend line support, and then 133.32 low of yesterday, and below which is again to further weaken the near-term price action. On the upside, clear break above 135.50 is required to resume the corrective phase from 132.11 low of 25th of November, and open the way for stronger recovery with 136, 136.14 next strong barriers to come in sight in case of break higher. I think on Friday there will be much more clear situation, and we'll see the clear direction of the single currency against the US dollar. The British pound, the downside remains vulnerable as the pair stays capped initially by trend line, a bear trend line drawn from 157.77 high of 30th of November. That currently stands at 156.72, ahead of 157 and 157.15.25 highs, a break of which is required to improve the current outlook. Yesterday's dip to 155.60, where the temporary support was found, and also marks a 61.8% Fibonacci retracement of the uptrend from 154.22 to 157.77, is attempting now to base here. As we can see on the 4-hour chart, the price slightly broke above 20 days moving average. However, clearance of trend line is required, and previous high of 156.63 posted yesterday is required to confirm the positive tone and refocus 157.20 key near-term barriers. On the downside, loss of 156 initially, and then 155.60 to further weaken the structure and resume the near-term downtrend from 157.77 with 155.25 and then 155.00 to come in focus. Hourly studies are improving at this point. However, it's still a negative outlook is weakening the current tone, as the pair is not succeeding to resume its gains, and the signs of exhaustion at these levels are seen. So clear break higher is required to resume. Otherwise, it's a risk of lower top at this level, which is around 136.40, and the fresh attempt higher as the pair remains in the near-term downtrend from 157.77. Dollar yen is again losing traction after a failure to clear 78 barrier. 78.10 high was seen on 2 days ago, and the steady decline with a series of lower lows are weakening the near-term tone. The overnight's low and today's low at 77.61 was seen so far. A brief break below the main bull trend line of 76.56 low might be signaling further weakness with 77.50. The Fibonacci level is now key support, break of which to further weaken the structure and open 77.28 low of 30th of November, and then our key support which is 77. level. It's also the figure support that will signal tops at 78.27 and 78.10, and likely open way for a further weakness. To avert immediate risk of further decline, a regain of minimum 78, where is currently bear trend line standing, is required, and 78.10, the high of 2 days ago, to resume gains higher towards 78.27 and 78.44 previous highs. The dollar Swiss is again hesitating after yesterday's failure to regain initial barrier at 93. Immediate risk comes now on the corrective pullback and threatening the channel support currently at 92.25, break of which would delay immediate price action that started from 90.64.69 double bottom and allow for a stronger correction at this point. Well, 38.2 Fibonacci retracement of the entire move comes at 92.07, where is also 92 as the figure support and previous strong resistance, ahead of further extension lower, and 91.85, and then 50% at 91.82. So we have the series of strong supports within 92, 98, 91.80 zone. The hourly studies are pointing lower now, and this might be risking a stronger pullback in case of break of trend line. On the 4-hour chart, the studies are still in the positive field. However, loss of momentum might risk attack at 20 days moving average, currently at 92.18, and again open way for a stronger correction. Clearance of 93 and 93.27, 93.13.27 highs is required to resume the broader uptrend from 70.67 record low, while break on the downside. Now we are in the wider picture below 90.00 as a psychological support at 89.50 again might bring the risk of double top and a stronger reversal, possibly towards 85.66 low of 27th of October. Now to commodities. Gold is finding some support and bouncing higher as 1700 zone as a strong support, as I mentioned in yesterday's presentation, is still holding the downside, and this is actually a very important level in case of break lower. The wider picture would again turn negative. However, the yellow metal is still in defensive from 1920 record high and 1802 lower top, with the latest price action seen in attempt to build up base from 1666. Failure to clear the main bear trend line at currently standing at 1753 still keeps the pressure on the downside, with loss of 1700, our strong support, expected to further weaken the tone and the open next level at 1672 and then 1666, break of which would be very bearish and would risk further retracement of the broader corrective attempt from 1532 low of 26th of September, and likely to confirm lower top at 1802. Crude oil also back to strength after finding good support at just above $100 per barrel, and currently is heading towards 102, ahead of 102.42, the high seen 2 days ago, and then next barrier at 103.35, above which is to resume the broader uptrend. The near-term studies are still positive and supportive, as 20 days moving average currently at 101 is supporting the advance, and the break above 102.42 is required to resume higher. Loss of higher platform at 100, 130 would be risky, where also comes the would be risky for extension lower below 100 and the test of 38.2 Fibonacci at 99.55 currently, and would delay immediate bulls. On the daily chart, the studies are in the positive territory, and the daily studies are in positive territory, and as long as 200 days moving average currently are at 96 zone contains the downside, the clear focus remains at the upside with clearance of 103.35 to open next leg higher, and possibly to next leg higher, and possibly to test 104.50 ahead of full retracement of the down move from 114.80 high of 2011 and test of this level.